If you had put $10,000 into NVIDIA just a few years ago, you'd probably be staring at a six-figure portfolio today. That's the power of getting one AI winner right. But here's the real question. Do you actually need to guess the next NVIDIA to profit from the AI revolution? Or can you just own the entire AI stack and let the winners come to you? In this video, I'll show you 4 AI-focused ETFs that together cover chips, data centers, platforms, and cybersecurity, so you can position yourself for the whole AI era, not just one company. Welcome back, where we break down complex AI and semiconductor investing into clear, actionable frameworks. Quick disclaimer, I'm not a financial advisor. This video is for education only, not a recommendation to buy or sell any security. Always do your own research and make decisions based on your personal situation. AI is moving fast. We have new chips, new models, and new software launching almost every quarter. Some companies will become giants. Others will vanish. You could try to time every earnings call and stop pullback. Or you can take a different approach. Own diversified AI ETFs that automatically tilt toward the winners while still spreading risk across dozens of companies. The 4 funds we'll cover today are VGT, Vanguard Information Technology ETF, SMH, VanEck Semiconductor ETF, CHAT, Roundhill Generative AI and Technology ETF, CIBR, First Trust NASDAQ Cybersecurity ETF. Together, they give you exposure to AI chips, data center and cloud infrastructure, AI platforms and software, cybersecurity, which becomes even more critical as AI attacks scale up. Let's start with the foundation. First up is VGT, the Vanguard Information Technology ETF. Think of VGT as the core AI infrastructure and software layer inside a simple, low-cost wrapper. VGT holds around 300-plus tech companies, not consumer staples like Pepsi or Costco, pure technology, semiconductors, hardware, system software, cloud, and SaaS giants. The key feature is its concentration in the leaders. A relatively small group of companies, names like NVIDIA, Microsoft, Apple, Broadcom, and other megacap innovators, make up a big chunk of the fund. When these names drive the AI boom, VGT directly benefits. On top of that, VGT charges a very low fee, similar to broad market ETFs like the S&P 500, while historically outperforming both the S&P and the NASDAQ over long time frames. If I could only pick one ETF to ride the entire AI era, VGT would be a strong candidate for that core spot in the portfolio. The next phase of the AI stack is semiconductors, the chips powering all of this. That's where SMH, the VanEck Semiconductor ETF, comes in. While VGT is a broad tech basket, SMH is intentionally concentrated. It holds only around 24 semiconductor names. The top positions include NVIDIA, TSMC, Broadcom, AMD, ASML, and Micron. Basically, the backbone of AI computing. Historically, semiconductors have been one of the most explosive segments of the tech market. When AI demand surges, cloud providers and enterprises need more GPUs, more memory, more advanced manufacturing. Those dollars flow into the companies inside SMH. The trade-off is clear: higher potential upside, because it's focused on one of the fastest growing parts of the AI supply chain. Higher volatility, because you're concentrated in a single industry. That's exactly why many investors pair VGT as the core with SMH on top when they want extra leverage to AI hardware. So far we've focused on hardware. But AI is more than chips. It's also the platforms and software built on top of those chips. That's where CHAT, the Roundhill Generative AI and Technology ETF, comes in. CHAT is designed specifically around the generative AI theme. It owns a curated basket of companies across 3 layers: platforms, companies building AI tools and ecosystems that others can build on; infrastructure, cloud and chip providers that host and run these models; applications and software, businesses weaving AI deeply into their products. You'll see names like NVIDIA, Alphabet, Microsoft, Amazon, Meta, and other AI platform leaders, plus select software companies that are aggressively integrating AI into their services. Unlike VGT and SMH, CHAT is actively managed. That means a human management team can add or drop holdings as new AI winners emerge and old names fade. The trade-off is a higher expense ratio, but in return, you get a dynamic, theme-driven basket that's focused purely on the generative AI wave. The last piece of the puzzle is one most people ignore until something goes wrong: cybersecurity. As AI scales, it doesn't just power new products, it also supercharges threats. AI-written phishing emails that look perfectly human, deepfake voice and video scams, automated attacks that probe thousands of systems at once. To defend against this, companies are pouring money into cybersecurity tools. That's where CIBR, the first trust NASDAQ cybersecurity ETF, enters the picture. CIBR holds a focused basket of 30 to 40 cybersecurity names, including leaders in endpoint protection, identity and access management, cloud and network security. You'll find companies like CrowdStrike, Palo Alto Networks, Zscaler, and others that are critical for securing data centers, remote workers, and AI infrastructure. Historically, CIBR has delivered solid long-term returns, and the structural trend is simple: more data, more AI, more devices means more budget for security. Now let's put it all together. These 4 ETFs are not random. They map onto different layers and phases of the AI era: VGT, Broad Tech Core, heavy in AI infrastructure and software giants; SMH, focused AI chip engine, amplifying exposure to semiconductors; chat, actively managed generative AI platforms and applications; CIBR, the security shield protecting all that new AI-powered value. Instead of trying to guess which single company will win, you're effectively saying, I want to own the entire AI stack, from chips to cloud to software to security, and let the market naturally tilt toward the biggest winners over time. Of course, that doesn't mean there's no risk. These are equity ETFs in volatile sectors. Prices can move sharply during corrections, regulatory shocks, or if AI expectations cool down for a while. That's why it's critical to take a multi-year view, size positions so you can emotionally and financially handle volatility, and see these funds as long-term building blocks, not short-term trading tickets. So those are 4 AI ETFs that let you participate in the AI revolution without betting everything on a single stock. If you want to go deeper into individual AI and semiconductor names, NVIDIA, AMD, Broadcom, TSMC, and more, I've linked another video on screen where I break down my favorite single stock ideas and the risks I'm watching. If you found this helpful, share it with a friend who's trying to figure out how to invest in AI. Hit the like button and subscribe so you don't miss the next breakdown. Thanks for watching, and remember, the best investment you can make is in your own knowledge. I'll see you in the next one.